We have all of your Tesla stock news and analysis you need to know for the day today. And if you're a Tesla shareholder, this news is very exciting. Let's go ahead and get into it. Tesla China sees vehicle registrations of 13.9 thousand in August 3rd week. Take a look at this chart that is comparing year-over-year numbers for this week. Last year in 2022, for the week of August 14th through the 20th, you had vehicle registration numbers out of China roughly at about 4,000. So you are way higher than what you've seen last year, and that is highlighted right here as you can see from my cursor. The green bar is 2022, and the yellow bar is 2023, substantially higher. The real test will come over the next following weeks, where in 2022, this is the highest point of deliveries you've seen for all of 2022. Does this continue the next following weeks? That is yet to be determined, but it looks like it probably does, based off what we have seen recently. Tesla's new Model 3 is undergoing road testing in Xinjiang. This is another sign that we're getting close to the launch of the refreshed Model 3 and also the Cybertruck. These events are right around the corner. Tesla's new Model 3 is undergoing road testing in Xinjiang, China. This likely means the refreshed Model 3 is on course to be launched in the beginning of September, and we are expecting an announcement some point this week, if not the beginning of next week. To the prior point of vehicle registration numbers, if we do get the refreshed Model 3's launch here in the next week or two, that could help boost a lot of your deliveries and could make 2023 a real outlier compared to 2022. That would be very good for Tesla's share price, and what we have seen recently, maybe markets are starting to expect that. Tesla has now become the world's largest supplier of energy storage systems in the first half of 2023. The company overtook BYD to top the list dominated by Chinese suppliers. According to SMM statistics, the global supply of energy storage systems in the first half of 2023 reached 72.4 gigawatt hours. Of these, Chinese suppliers accounted for 47 gigawatt hours. This is equal to 65%, which underlines the country's leadership in the field. The rest of the suppliers combined supplied 25.4 gigawatt hours or 35%. Nevertheless, American Tesla still has the lead. The company's supply in the first 6 months of the year exceeded 7 gigawatt hours, placing it in first in the world. Green Mountain Power is requesting to expand customer access to cost-effective home energy storage through popular power walls and BYOD battery systems, if approved. Number 1, the Vermont Public Utility Commission lifts caps on consumer enrollments. Number 2, customers in GMP's home battery programs stay powered up during severe weather. Number 3, expanded enrollment is an urgent need as Vermont experiences increasing extreme storms due to climate change. Number 4, Neighbors Helping Neighbors programs unique energy sharing cuts cost for all GMP customers. Decisions addressing growing waitlists to enroll that currently extends to 2026. The demand for these systems will be insane if some of these incentives are passed in Virginia. This is again another point to Tesla. The energy storage business is becoming a larger and larger portion of Tesla's revenue. And while a lot of your analysts, especially your bearish analysts, continue to believe Tesla is just an auto manufacturer, well, energy and storage is certainly catching up. As we did go over a former director of Tesla's board that said just that in yesterday's video. So I highly recommend you guys take a listen to that. You will find a lot of valuable information from it. Tesla to resume Giga Shanghai Phase 1 battery plant to support Project Highland. says this report. With the Tesla Model 3's Project Highland update seemingly just around the corner, the electric vehicle maker seems to be preparing itself for an explosion of orders for the revamped vehicle. This was at least suggested in recent reports from insiders in China. Citing individuals reportedly familiar with the matter, Chinese publication 36 Krypton recently reported that the Model 3 Project Highland would start deliveries around late September. To make sure that the revamped Model 3's ramp goes smoothly, Tesla China is reportedly looking to resume production at Gigafactory Shanghai's Phase 1 battery plant. As per 36KR, the impending demand for the Model 3's Project Highland update is now promoting Tesla to resume operations at Giga Shanghai's Phase 1 battery facility. Quote, "Now demand is up, so Phase 1 is ready to reopen again," the publication's source noted. Giga Shanghai is reportedly home to 3 battery facilities, Phase 1, Phase 2, and Phase 2.2. Phase 1 is reportedly the smallest and oldest in the facility, and is also the least automated. Meanwhile, Phase 2 is reportedly Giga Shanghai's main battery facility, and Phase 2.2 is the newest, built just over half a year ago. 36KR noted that overall, Giga Shanghai's Phase 1 battery plant can produce about 3,000 to 4,000 battery packs per week, while Phase 2 and Phase 2.2 can each produce 10,000 packs per week. So you're looking at roughly 23 to 24,000 battery packs that can be produced. So that means instead of 19 to 20,000 potential vehicles rolling out of Giga Shanghai, you're looking at 23,000 to 24,000 potential vehicles rolling out of Shanghai. That would be roughly 92,000 every single month. Times that by 3, that could be 276,000 vehicles every quarter coming out of Giga Shanghai alone. Not to mention Giga Texas, Giga Berlin, Fremont, and in the second half of 2024, Giga Mexico. And analysts believe Tesla will only see delivery growth rates of 27% and EPS growth of 29%. This is, again, as I believe, my opinion, the easiest money on Wall Street today. Tesla would not be opening up Phase 1 battery production again if they did not think they would be able to sell more than 19 or 20,000 vehicles every single week. That just is not how Tesla operates. So if they're opening this, that means they expect massive demand for the Model 3. Keep in mind, over in China, Tesla started taking reservations for the Model 3 Highland a couple of weeks ago. So they're probably seeing good real-time demand. This could also be a reason that Tesla stock has been going higher recently. Maybe there is good news coming, as I said in the prior video. But as you know, things cannot be great for too long. Tesla's Giga Berlin faces production challenges amid a staff shortage, according to this new report out today. Tesla's Giga Berlin is now only producing about 4,000 Model Ys per week. The capacity for Giga Berlin is much higher than that. And Giga Berlin recently was at a production rate of about 5,000 Model Ys per week. However, according to Business Insider, the factory's production targets have been revised downwards to 870 vehicles per day, or 4,350 cars per week, well short of the 5,000 cars per week achieved 5 months ago. However, even that rate has been difficult to achieve, as internal sources claim that the actual production rate is currently below 4,000 cars per week. The primary reason behind these challenges is a shortage of workers within the factory, with existing employees complaining about heavy workloads, shifts going unfilled, and an increase in sickness rates. The recent decision to hire fewer temporary workers and to eliminate Saturday shifts have also had an impact. The Model Y remains a popular choice among European customers, earning the status as the best-selling car through the first 5 months of 2023. And while the production rate is apparently lower than anticipated, it appears to be enough to meet the demand. According to Tesla's online configure configurator, orders placed today for any variant of the Model Y in Germany are expected to be delivered in either August or September. Tesla wants to increase EV production at Giga Berlin from 500,000 vehicles per year to 1 million vehicles annually. Additionally, Tesla is wanting to double the battery production output from 50 gigawatt hours to 100 gigawatt hours. This is something we have previously covered here on the channel. We are seeing a new video from S.E. Robinson Jr. over on Twitter showcasing these two car haulers with 7 Cybertrucks in total. And these, I believe, are around the Arizona region. We are also seeing 2 Tesla semi-trucks spotted in Fresno, California. According to Dean Little, a logistics driver with Tesla, the semis are currently on the road for testing and originated out of Lathrop. Little mentioned that his drive put about 400 miles on the truck, which used roughly 80% of its battery life. He also said that the goal of the test drive is to figure out what works and what doesn't work while on the road. He also has been driving trucks for about 25 years and says the Tesla Semi puts you in the middle of the road instead of off to the side of the road, so potentially even safer than a normal semi-truck. Come to think about it, my grandpa has drove semi-trucks my whole life, so I should get his opinion as well on the Tesla Semi. In other broad market news, home sales fall again in July as supply drops to a near quarter-century low. The median price of a home sold in July was $406,700, an increase of 1.9% from July of last year. Sales fell month to month in all regions except the West, where they gained 2.7%. Sales fell the most in the Northeast, down 5.9%. There were 1.11 million homes for sale at the end of July, 14.6% fewer than July of 2022, and about half of the pre-COVID supply. This does not exactly support rental prices coming down anytime soon, potentially problematic for our markets. In some other rather interesting news, Tesla engineering executive Colin Campbell joins Redwood Materials as technology chief. Based in Carson City, Nevada, Redwood was founded by Strobel in 2017, while he was still serving as Tesla's CTO. Campbell announced the move on LinkedIn on Monday. Now, what Redwood Materials does is they are a battery recycling startup founded by Tesla board member J.B. Strobel, recently nabbed Tesla's vice president of powertrain engineering, Colin Campbell, to serve as chief technology officer. Campbell announced the move on LinkedIn on Monday, capping a 17-year tenure working for Elon Musk's electric vehicle company in a variety of engineering and leadership roles. He thanked his former colleagues at Tesla for a once-in-a-lifetime experience. Another big story in the markets today is S&P Global has downgraded some banks. S&P Global says the actions will make borrowing more costly for a banking sector aiming to recover from a crisis earlier this year, when 3 regional bank lenders failed, prompting broader industry turmoil. This is because Fed Jerome Powell continues to raise rates, and they're going to hold those rates higher for longer. And S&P Global says some of the structural aspects of banks regarding their balance sheet remain risks to banks. That's a problem. S&P on Monday cut ratings on Associated Bank, Valley National Bank Corp., and funding risks and higher reliance on brokered deposits. It also downgraded UMB Financial and Comerica Bank, citing deposit outflows and higher interest rates. The rating agency also cut KeyCorp's rating on the back of constrained profitability. The ratings actions weighed on the stocks of major banks, even though they were not mentioned by S&P. Shares of JP Morgan Chase and Bank of America both fell almost 2%. While Wagner was surprised that banks had healthier than expected loan growth in the second quarter, he still expects lenders' problems to persist. S&P also lowered its outlook on S&T Bank and River City Bank to negative from stable, citing higher CRE exposure. CRE stands for commercial real estate. 2-year Treasury yields are now breaking above 5% for the first time in a while. The last time you were above 5% was back here on March 8th of 2023 when the 2-year Treasury hit a high of 5.08%. You're at 5.02%. 5% is a very important level because this suggests over the next 2 years, we're not going to get as many rate cuts as the markets are expecting. While at the same time, the 10-year Treasury is declining about the same as the 2-year Treasury is gaining, declining about 2.5 basis points to 4.316%. Although this is a new high of this cycle, you're falling a little bit today. Not enough to get the markets excited, but it could be a start. The real problem that we have seen recently is the fact that the 10-year and 3-month yield curve inversion is starting to uninvert. We've talked about this many times, but it's not the inversion that is painful for markets. The inversion is actually quite a good time historically to be invested in the markets. It's when this chart starts to go higher again after it was under this black line that you start to get the problem. Notice back here, you were inverting. You didn't go into a recession until this started to uninvert. Same thing back here during the Great Financial Crisis. You were inverted and you started to rise and boom, you went into a recession. Back here before COVID in 2019, you were inverted and then you started to rise and then you went through the COVID recession. Well, look what's happening now. You hit a low of negative 1.88% inverted, meaning that the 3-month bond was paying you 1.88% more than the 10-year bond. Now, you're only getting 1.23% more on the 3-month bond compared to the 10-year bond. That is because the 10-year bond has been rising. Those yields are breaking out to a new high of the cycle. So you're getting an uninversion. This, historically, is not good for equities. Also in the news today, this one is from Sawyer Merritt. Great piece over here. Thank you as always for keeping the community informed. VinFast IPO'd last week. Today, the stock is up 114% with a market cap of $171 billion. The company has sold under 100,000 vehicles globally in the last 4 years combined. Part of the reason for the crazy volatility is only a tiny fraction of VinFast's 2.3 billion shares outstanding are available to trade, creating a supply and demand issue. I think this highlights something important though. Tesla is actually profitable. Tesla is actually selling vehicles. Tesla actually has energy storage, massive runway. The scalability is essentially unlimited there. Autonomy, full self-driving. Nobody can really hold a candle to Tesla. On top of the coming Cybertruck and the refreshed Model 3, is Tesla's valuation too high today? Well, compare it to some of the quote-unquote competitors like a VinFast or a Lucid or a Rivian or anyone else. Tesla is undervalued. That's my logical conclusion. Tesla's stock at the time of recording this video is trading just above $232 per share, up 0.39% on the day. Tesla still green after the strong day that we seen yesterday. This is a sign that something is coming that maybe we don't know about yet. I think some really good news. Maybe the Model 3 refreshed edition? Well, that news could be very bullish, or the actual delivery date for the Cybertruck, or maybe even licensing of full self-driving. Yesterday's 8.5% move, followed by this move we're seeing today, is about 9% in the last 2 days. It could be an oversold bounce. Sure, that's possible. But 9% in 2 days? That would be one hell of an oversold bounce. New ACSI data shows that Tesla has tied Lexus for the lead in luxury satisfaction. After Lexus slid 1% to 83, the company now shares the top spot with Tesla, which accelerated 4%. This again highlights Tesla's dominance in consumer satisfaction. in luxury, technology, and affordability. Nobody can stand a candle to Tesla. And I think this is the reason of many others that Tesla will do just fine next year. The estimates are far too low, and buying Tesla stock today is like receiving free money from the marketplace. Now, in the meantime, the next couple of days, we have major catalysts coming. Nvidia earnings. There's very high expectations. Nvidia stock has done very well in recent days, surging over the past couple of days, specifically alongside Tesla. If Nvidia has bad earnings, or even if they have good earnings, but the stock falls because expectations are too high, that's going to have a very much negative impact to Tesla stock and the broader markets, and that could be a cause for a little bit of concern. But again, I think there's very good news coming for Tesla, as we've seen with a 9% rally in the last 2 days, and this could be overblown. If Nvidia has bad earnings, the stock might not actually fall out. There's a lot of unknowns when it comes down to trying to predict earnings reactions from stocks. That's a fool's game. But there is a chance this does create downside pressure for Tesla, or markets could rally off of Nvidia earnings. It's hard to tell. Let me know down below in the comment section, what do you think about Nvidia earnings? Is this a positive or a negative catalyst? We're also going to have Fed Jerome Powell on Friday. I think that's probably going to be a nothings burger. That's probably not going to mean too much for the markets. We're probably not going to get a whole lot of new information. So that is going to do it for this video. That is everything you need to know. Again, if you do get downside, you want to watch that 100-day moving average around $221 per share. I will say good news is today, Tesla stock has been holding support of about 230 pretty dang well. So that would be a good sign. Tesla's RSI is currently at 40.83, so that is also better than where we're at back here on August 18th when the 2-day bounce started and Tesla stock was oversold. So anytime you can buy Tesla stock when the RSI is oversold, that tends to be a pretty good buy. And I think the last 2 days also highlighted that. So if we do see some downside, that's a big buying opportunity. Nonetheless, that is your analysis for the day today. That is your daily dose of Tesla and everything you need to know. Hit the like button and subscribe to the channel if you like this information, if you want to make more money, or you just want to stay up to date with everything happening with Tesla stock and the broader markets every single day. My name is Michael Tyler. Thank you for joining me today, and I will see you in the next one.